Hello and welcome to AI Market News by LM. We're jumping right in because, wow, what was supposed to be a really strong start to December for stocks has just been flipped completely on its head. There's this sudden, totally unexpected wave of selling that's hitting markets all over the globe, and we're going to break down exactly why. What we're seeing here is a classic risk-off event. And that's just a fancy way of saying investors are getting seriously spooked. They're dumping riskier stuff like stocks and basically making a run for the perceived safety of things like government bonds. So let's take a look at the data and see just how deep this nervousness really goes.
Okay, so this slide on market breadth, it really paints a stark picture for us. On the very first day of December, a whopping 65.5% of stocks were in decline. I mean, that is a huge majority of the market just drenched in red. It sets a really nervous tone right out of the gate for the month.
So the big question is, what lit the fuse on all this sudden fear? Well, all signs are pointing to one place, a major surprise from the Bank of Japan. They made what we call a hawkish shift in their language, basically signaling they're ready to raise interest rates. And believe me, that sent some serious shockwaves through the entire system.
And this right here, this is the quote that sent tremors through the markets. The Bank of Japan's governor, Ueda, basically hinted that Japan's decades-long era of super easy, cheap money could be over in just a matter of weeks. For traders, that message was crystal clear. Get ready, a rate hike is probably coming.
The market's reaction was, well, immediate and pretty historic. Japan's two-year government bond yield, which is a great indicator of where policy is going, it shot past 1%. Now, to put that into perspective for us, that's a level we have not seen in over 17 years. It's a huge deal.
And this chart just perfectly illustrates the mad scramble that happened next. You can see, before these comments, traders thought there was a pretty low chance of a rate hike in December. But afterward, boom. The probability priced by the derivatives market just exploded past 70%. The entire market had to completely rethink and reprice everything, literally in a matter of hours.
Okay, so let's track how this one event in Japan snowballed into a global story, because this is where it gets really fascinating. When the world's third largest economy, and a massive global creditor, by the way, makes a fundamental shift in its policy, you better believe those ripple effects are going to be felt everywhere.
So here's the crucial link that connects it all. For years and years, Japan's super low rates meant that a river of cheap money flowed out of Japan and into global markets. But now, as those Japanese government bond, or JGB yields start climbing, they suddenly look a lot more attractive to Japanese investors. This gives them a huge incentive to sell their foreign bonds, like say US Treasuries, and bring all that cash back home. And all that selling pressure, it pushes Treasury prices down. And as we know, when bond prices go down, their yields go up.
And that is precisely what we saw happen. As the sell-off in Japanese bonds started to spread, it slammed into global debt markets. The benchmark US 10-year Treasury yield climbed, hitting 4.096% as a direct result of this contagion effect.
Of course, this risk-off mood didn't just stop at bonds. It spread to the most speculative corners of the market too. We saw absolute carnage in the crypto world, with nearly $1 billion in leveraged positions just completely wiped out. It's yet another flashing red light that investors were ditching their riskiest bets as fast as they possibly could.
All right, so now let's get into the scorecard. Let's break down how all this chaos and volatility actually impacted the specific assets we all watch so closely. We'll start with currencies, and then we'll jump over to stocks.
No huge surprise here. The Japanese yen strengthened dramatically. I mean, it makes sense, right? The prospect of higher interest rates makes holding a currency a much better deal. So the yen, or JPY, shot up and quickly became the strongest performing major currency, right after the news broke.
Now, if we look at the major currency pairs, while the euro-dollar stayed pretty stable, the dollar-yen saw some absolutely wild swings. And yeah, this particular snapshot might show a tiny gain for the dollar, but that's just a single moment in time. The reality is, the pair was swinging back and forth like crazy as the market tried to figure this all out, with the yen ultimately having its strongest day in months.
And for US stocks, this whole situation was really a double whammy. You've got rising bond yields, which make stocks look less attractive in comparison, and then you add in this general cloud of fear hanging over the market. That combination proved to be a really powerful headwind, and it was enough to snap a 5-day winning streak for the major indexes. Now, I know this snapshot of futures trading looks pretty calm, almost flat, but trust me, it does not tell the full story of the day. During the main trading session, the major US indices had a very shaky start to December.
The sell-off really hammered small-cap stocks and tech stocks in particular, though to their credit, they did manage to claw back some of those losses by the closing bell.
So, with all this sudden volatility completely shaking up the start of the month, what's next? What are the key events that we absolutely need to be watching now to get a sense of where the market might be headed from here?
Well, there are three massive events right on the horizon for us. First up, we've got key U.S. manufacturing data, which is going to give us a really important health check on the economy. And then we have the main events, pivotal meetings from both the Bank of Japan, where we'll finally see if they actually follow through on these hints, and, of course, the U.S. Federal Reserve.
Keeping a close eye on a detailed economic calendar like the one you can find on investing.com is going to be absolutely essential for navigating all the potential twists and turns in the weeks ahead.
So when you put it all together, this perfect storm of a surprise out of Japan, the ripple effects hitting global bonds, and these massive central bank meetings right around the corner, it really leaves us with one huge question. Is the traditional Christmas rally that we often see now in serious jeopardy?
And before we wrap up, just a few quick notes. This video is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description.
As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech.
And just a reminder, this video does not provide investment or trading advice. Please make investment decisions at your own discretion.
Thanks for watching, and hey, don't forget to like and subscribe. We'll see you next time.